If you're trying to find stocks in which to invest, sifting through the tens of thousands that are out there is a daunting task. Getting to know the Dividend Kings can be a great place to start to help you build a solid foundation for your individual stock portfolio. Now, to be considered a Dividend King, a company must increase their dividend for 50 or more consecutive years. That's pretty great, right? But that's it. That's the only requirement. They don't have to be a member of the S&P 500, and they don't have to be a certain size. That's why some of these kings are not also aristocrats. Those S&P 500 stocks who have increased their dividend for 25 or more consecutive years. The dividend yields on this list range from just under 1% to more than 7%. There are currently, as of this recording, only 36 companies who have accomplished this feat. See why it could be a good place for you to start? You got this. This is just going to be a brief introduction to each of these companies, a starting point for you to identify the ones you're most interested in researching further. Now, when yields are high, there's something else going on. Some reason investors are a little more afraid of owning that company. As an investor, it's your job to figure out if investors are overreacting or underreacting to that information, to see if the potential risks that exist are worth, to you, the potential reward you'll get from holding the stock. And if a yield is relatively low, that also doesn't mean it couldn't be a solid position in your portfolio. You also should consider how much the underlying stock might increase or decrease in price, and by how much the dividend might change in the future. Keep in mind, the Dividend King status is priced into these stocks' prices. As in, if they ever lose this status, i.e. they don't increase their dividend some year or they have to cut it at some point in the future, owners of that stock will potentially experience much more downside, as many people and ETFs only own the stock for its dividend track record. So it's always important that you understand why you're invested and what it is you choose to invest. For each of these, I'm going to give you the company's name and ticker symbol so that you can find it on your own if you decide to research it further. I'll give you the sector it operates in. It can be risky to allow too much of your portfolio to be invested all in the same sector, for example. I'll also give you the size of the company as measured by market capitalization. There are a couple of very small companies here, and very small companies are generally considered to be riskier. And then the good stuff. I'll give you the dividend yield. That is effectively the percentage return you could expect to generate from a purchase of the stock if the company continued to pay dividends at the exact same level it is currently, which again, that number, for the past 50 plus years at least, has been increasing at least a little every single year. To that end, I'll give you the number of consecutive years they have increased their dividend. And for a recent perspective at least, I'll calculate for you the annualized 5-year dividend growth. So that helps you know how much, on an annualized basis, each of those increases has been worth, at least over the last 5 years. Now, there are a ton of ways you can and should evaluate the relative value of any of these stocks before purchase. But just for a quick insight into how the valuation of each compares to the market, I'll show you the company's trailing price to earnings or PE ratio. For context, the US market as a whole currently has an average PE ratio of just over 17. So that can kind of serve as a very minimalistic valuation baseline for these stocks. Finally, you'll want to be sure to gauge the company's ability to continue paying dividends. As I said, that could be a massive shock for shareholders if they stop. And that, of course, does happen from time to time. For a quick check into that, I'll share with you their payout ratio, which is a percentage that compares a company's dividend payments to its retained earnings, essentially how much it's profiting each year. If they're promising to pay out more to shareholders than they realize in profits each year, that could be a problem. Again, there are several other variables you can look into when checking a dividend payer's long-term viability, which, that reminds me, years ago I created a checklist of 11 must-ask questions before purchasing a dividend stock. Payout ratio is just one of them. That should still be available for download. I'll look that up for you and put the link in the description. Quick disclaimer, I am a licensed financial advisor, regulated by the government. This is not financial advice, literally, it's not. This video especially, this is just a list of all the stocks that currently meet this criteria. All right, let's get into it. Let's go from lowest to highest dividend yield, shall we? Number 1, Nordson Corporation, ticker NDSN. It's in the industrial sector with a market capitalization of $13.9 billion. Its current dividend yield is 0.9%, and it's been increasing its dividend for 58 consecutive years. Its 5-year dividend growth has been 13.6%. That's the second highest of every company on this list. Its trailing PE is 15.3, and its payout ratio is 11.6%, the lowest of every company on this list. So you can see right out of the gate, when you have favorable valuation metrics, the yield tends to be lower. It's generally thought of as safer. Number 2, HB Fuller, ticker FUL. It's in the basic materials sector and its market cap is $4.0 billion. Its dividend yield right now is 0.9%, and it's been paying that and increasing it for 52 consecutive years. Its 5-year annualized dividend growth is 3.9%, has a trailing PE of 26.8, and a payout ratio of 23.6%. Number 3, Tootsie Roll, ticker TR. Tootsie is in the consumer defensive sector with a market capitalization of just $1.4 billion. Its dividend is currently 1%, and it's been increasing that for 53 consecutive years. Its 5-year dividend growth is 2.8%, and its trailing PE is 22.8. Its payout ratio right now is 40.3%. Number 4, Stepan Company, ticker SCL. It's in the basic materials sector. Its market cap is $2.7 billion. Its current dividend is 1.1%. Consecutive years, 54, with a 5-year dividend growth of 12.7%. Its trailing PE is 18, and its payout ratio is 19.2%. Number 5, Dover Corporation, ticker DOV. It's in the industrial sector with a market capitalization of $25.7 billion. It currently has a dividend yield of 1.1% and has been paying that for 66 consecutive years, paying that and increasing it for 66 consecutive years. That's one of the 7 longest records on this list. Those are the records with 65 and 66 years. There's 7 of those. Its 5-year dividend growth is 2.6%. Its trailing PE is 27.2, and its payout ratio is 30.5%. Number 6, Parker Hannifin Corporation, ticker PH, sector industrials, market cap $42 billion. Current dividend yield 1.3%, consecutive years 65, also one of those 7 longest records. 5-year dividend growth is 9.3%, trailing PE 22.4, and payout ratio is 27.6%. Number 7, WW Grainger. Its ticker is GWW. It's in the industrial sector as well with a market cap of $26 billion. Currently has a dividend yield of 1.3%. It's been paying and increasing that for 50 years. Its 5-year dividend growth is 5.8% with a trailing PE of 28 and a payout ratio of 36.1%. Number 8, Lowe's, ticker LOW. Sector consumer cyclical. Its market cap is $164 billion. Its current dividend yield is 1.3%, and its consecutive years increasing that dividend is 59. Its 5-year dividend growth, get this, 18%. That's the highest of every company on this list. Now, they had a really strong year last year, but that's why, but still, 18% 5-year dividend growth. Its trailing PE is 20. Its payout ratio is 26.3%. Number 9, Becton, Dickinson and Company, ticker BDX. They're in the healthcare sector with a $74.9 billion market cap. Their dividend yield is 1.3%, and they just made it onto this list. They have 50 consecutive years. Their 5-year dividend growth is 3.6%, trailing PE 18.7, and payout ratio 24.4%. Number 10, Commerce Bankshares Inc., ticker CBSH. They're in the financial services sector with a market capitalization of $8.7 billion. Their dividend yield is 1.4%, and they have 53 years of consecutive growth. Their 5-year dividend growth is 3.1%, trailing PE 16, and payout ratio 21.7%. Number 11, PPG Industries Incorporated, ticker PPG. They're in the basic materials sector with a $39.2 billion market cap. They have a 1.4% dividend yield, and they also just made it on this list with 50 consecutive years of increasing that dividend. Their 5-year dividend growth annualized is 8.1%. They have a trailing PE of 27.5 and a payout ratio of 37.7%. Number 12, California Water Service Group, ticker CWT. They're in the utilities sector with a market capitalization of $3.3 billion. Their dividend yield is 1.5% with 53 consecutive years of increasing that. Their 5-year dividend growth is 5% with a trailing PE of 29.1 and a payout ratio of 41.2%. Number 13, American States Water Company, ticker AWR. They're in the utility sector, and they have a market capitalization of $3.5 billion with a dividend yield of 1.6%. Now, they are one of those 7 companies with the longest track records of increasing their dividend. They've increased it for 66 consecutive years. Their 5-year dividend growth rate is 8.6% annualized, trailing PE 37, payout ratio 55%. Number 14, Farmers and Merchants Bancorp, ticker FMCB. They're in the financial services sector, and they are the smallest of all the companies on this list. Their market capitalization is $0.7 billion. That puts them in the small cap sector. They're officially the only way you can buy them is on the OTC pink sheets. But despite being so small, they have earned their way on this list with a dividend yield of 1.6% and 56 years of consecutively increasing their dividend payment. Their annualized dividend growth over the last 5 years is 3.1%. They have a trailing PE of 11.3 and a payout ratio of 18%. Number 15, Target Corporation, ticker TGT. They're in the consumer defensive sector with a market capitalization of $106.1 billion. They currently have a dividend of 1.6% and 54 years of consecutive growth. Their 5-year dividend growth is 8.4%. They have a trailing PE of 15.6 and a payout ratio of 23.1%. Number 16, Stanley Black & Decker, ticker SWK. Sector, industrials. Market cap, $31.4 billion. Current dividend yield, 1.6%, with 54 years of consecutive increases. Their 5-year dividend growth is 6.4%, their trailing PE is 17.4, and their payout ratio is 26.5%. Number 17, ABM Industries, ticker ABM. They're in the industrial sector with a $3 billion market cap. Their current dividend yield is 1.7%. They've increased that 54 consecutive years. Their 5-year dividend growth is 2.8%, with a trailing PE of 12 and a payout ratio of 20.5%. Number 18, Lancaster Colony Corporation, ticker LANC. They're in the consumer defensive sector with a market capitalization of $4.6 billion. Their dividend yield is 1.9%, and they have 59 years of consecutive increases. Their 5-year dividend growth is 7.8%, trailing PE is 33.7, and payout ratio is 61.4%. Number 19, SJW Group, ticker SJW. They're in the utilities sector. Their market cap is $2 billion, and their dividend yield is 2% with 55 years of consecutive increases. Their 5-year dividend growth is 9.3%. Their trailing PE is 36.5, and their payout ratio is 71.1%. Number 20, Cincinnati Financial Corporation, ticker CINF. They're in the financial services sector with a market capitalization of $4.7 billion. Their current dividend yield is 2.1% with 61 consecutive annual increases. Their 5-year dividend growth is 4.7%. Their trailing PE is 7.6. That's the lowest of every company on this list. And their payout ratio is 16.1%. That's the second lowest of every company on this list, the second best, the healthiest. Number 21, Emerson Electric, ticker EMR. They're in the industrials sector with a $58 billion market cap. Their current dividend yield is 2.1%, and they are another one of those 7 longest track records with 65 consecutive years of increases. Their 5-year dividend growth is only 1.4% though. Their trailing PE is 12.6, and their payout ratio is 26.3%. Number 22, Hormel Foods Corporation, ticker HRL. They're in the consumer defensive sector. They have a $26.6 billion market cap, 2.1% dividend yield, 56 years of consecutive increases, an 8.9% 5-year annualized dividend growth rate, a 14.7 trailing PE, and a 29.7% payout ratio. Number 23, Colgate-Palmolive Company, ticker CL. They're in the consumer defensive sector with a $70.3 billion market cap. They currently have a dividend yield of 2.2%. They've been increasing that for 58 consecutive years. They have a 5-year dividend growth rate of 2.9%, a trailing PE of 26.4, and a payout ratio of 56.7%. Number 24, Procter & Gamble Company, ticker PG. They're in the consumer defensive sector with a $386.7 billion market cap. That's the second largest of all the companies on this list. They have a 2.2% dividend yield with 65 consecutive years of increases. Again, one of those 7 with the longest track records. Their 5-year dividend growth has been 5.4%. They have a trailing PE of 27.9 and a payout ratio of 62.7%. Number 25, Cisco Corporation, ticker SYY. They're in the consumer defensive sector with a $40.9 billion market cap. They have a dividend yield of 2.4%. They've increased that 51 consecutive years. Their 5-year dividend growth is 7.3%. Now they have a trailing PE of 59.7. That's the highest/worst by a decent margin compared to everyone else on this list. Their payout ratio is 138.6%. That's the second highest of everyone on this list. Number 26, Genuine Parts Company, ticker GPC. They're in the consumer cyclical sector with a $19.7 billion market cap. The current dividend yield is 2.4%, and they are also one of those 7 with 65 consecutive annual increases. Their 5-year dividend growth is 3.8%, trailing PE 24.2, and payout ratio 57.4%. Number 27, Johnson & Johnson, ticker JNJ. They're in the healthcare sector with a $441.9 billion market capitalization. That's the largest of everyone on this list. J&J's current dividend yield is 2.5%. They have 59 consecutive years of increasing that dividend. Their 5-year dividend growth is 5.8%. Their trailing PE is 24.7, and their payout ratio is 62.1%. Number 28, one of Buffett's favorites, the Coca-Cola Company, ticker KO. They're in the consumer defensive sector with a $265.2 billion market cap. Their dividend is currently 2.7%, and they have 59 consecutive years of growing that dividend. Now, their annualized dividend growth over the last 5 years was only 2.6%. Their trailing PE is 30.1, and their payout ratio is currently 81.8%. Number 29, National Fuel Gas Company, ticker NFG. They're in the energy sector with a $5.8 billion market cap. They have a 2.8% dividend yield with 51 consecutive annual increases. Their 5-year dividend growth is only 2.4%, but they have a trailing PE of 8.0. That's the second lowest of every company on this list. And their payout ratio is only 22.6%. Number 30, Federal Realty Investment Trust, ticker FRT. They're in the real estate sector with a $10.3 billion market cap. This REIT is currently offering a 3.2% dividend yield and boasts 54 years of consecutive increases. Now, its 5-year dividend growth has only been 1.8%. Its trailing PE is 44.5, and its payout ratio is currently 84%. Number 31, 3M Company, ticker MMM. It's in the industrial sector with a $103.4 billion market cap. Currently has a 3.3% dividend yield, has 63 years of consecutive increases. Its 5-year annualized dividend growth rate is 4.7%. Its trailing PE is 17.3, and its payout ratio is 57.5%. Number 32, Black Hills Corporation, ticker BKH. It's in the utilities sector with a $4.3 billion market cap. Its dividend yield is 3.5%, and it just made it on this list as well with 50 consecutive years of increases. Its 5-year dividend growth is 6%, its trailing PE is 17.9, and its payout ratio is 58.6%. Number 33, Northwest Natural Holding Company, ticker NWN. It's in the utilities sector with a market cap of just $1.5 billion. Its dividend yield is currently 3.9%, and it has 66 years, one of those 7, of consecutive increases. Now, its 5-year dividend growth rate has only been roughly 0.5%. Its trailing PE is 16.9, and its payout ratio is 64.4%. Number 34, Leggett & Platt Incorporated, ticker LEG. It's in the consumer cyclical sector with a $5.5 billion market cap. Its current dividend yield is 4.1%, and it also is new to this list with 50 consecutive years of increases. Its 5-year dividend growth is 4.3%. Its trailing PE is 13.8, and its payout ratio is 55.9%. Number 35, Universal Corporation, ticker UVV, sector consumer defensive, market cap only $1.4 billion. Its dividend yield is currently 5.5% with 50 years of consecutive increases. Its 5-year dividend growth is 7.6%. Its trailing PE is 14.3, and its payout ratio is 76.9%. And finally, number 36, Altria Group Incorporated, ticker MO. It's in the consumer defensive sector with a market capitalization of $93.3 billion. It has a 7.1% dividend yield. It boasts 52 consecutive years of increases. Its 5-year dividend growth rate was 8.1%, and its trailing PE is only 33.7. But its current payout ratio is 233.2%, which is the highest or worst of every company on this list, but maybe worth looking into. So there you go. Those are the 36 Dividend Kings. Which is your favorite from that list? Let me know in the comments. Dividend stocks are just one of the 5 ways that I outlined in this video that you can better protect yourself from potential market crashes without sacrificing the market's upside potential. So click on this video next, and I look forward to speaking with you in the comments. I wish you all the best. Take care.